All right, good afternoon, traders. Today we're taking a look at the gold market. This is the ETF GLD that tracks gold futures. I typically like to look at the gold futures. It's going to be a lot more clean, more fluid as it's trading around the clock, virtually 23/6. But regardless, if you want to look at the futures or the ETF, you're going to see the same pattern. And what we're looking at here, of course, we've had extreme volatility in gold, as with the majority of other markets during this unique time in our history. But looking here at gold, I had drawn up an area of some potential resistance. If we go back to a weekly chart, this was kind of my next line in the sand. Next line in the sand would be up here at these levels, right before we had the all-time highs up there into the 1800 level in futures, or the 185 level in GLD. So we are now approaching a level. You can see we've been kind of lockstep, pretty much sideways for the better part of 2013 or so. Finally getting this last leg higher the early summer months of 2019. But we've seen a pretty healthy move here from the beginning of the year, from the 140 level up now to the 155, 160 area. If we go back to a daily chart, though, we are now trading into an area that historically, or in the past, the price has rejected. And that goes all the way back, as we saw here on our weekly chart. So if we go back to the daily, we're looking now at a potential turning point or a reversal point. Could be a bearish candle or some type of reversal pattern here at these levels. So that would be clue number one, to be potentially looking for possible short positions. But if we look now from a seasonality standpoint, we have a very high probability bearish trade lurking around the corner on or around April 14th. So you can see this trade hasn't been quite 30 days, but good enough for government work. We'll call it a 30-day trade here, or about a month-long trade. And if you can see here the year-by-year statistics and breakdown going all the way back to 2012, we only had this one losing trade. One losing trade over 8 years of data, and is a relatively small loser comparatively to the average profit of around $4,400. So knowing that we are coming into this seasonal window here where we could be toppy based on the last 8 years of data, and compare that to technical analysis where we are now approaching an area of high probability resistance, we are now on the lookout for a potential short trade. So today we had a huge move up $60 or 3.5%. And so now we'll see how we react at this level heading into tomorrow and the rest of the week for potential short trade. Those of you that know or follow seasonality know that there is no exact date on the calendar that we buy and sell. We look at the charts to help us fine-tune our entry. So what we'll be looking for is to trade GLD or the futures contract, and we'll be looking at the June contract for this trade. You can trade the front. We can trade the front month, which is April here. You can see we have 1, 2, 3, 4 tops right here, quadruple top here at this 1700 area. But to give us a little bit more time to work with the trade, we'll focus on the June contract. So again, you can do this using GLD, the ETF, or other leveraged or non-leveraged ETFs that track gold futures. So I'll be doing a webinar this evening, April 7th at 7 p.m. Eastern. If you would like to join to see how we use seasonality and technical analysis to find high probability trade ideas, I encourage you to click on the link below. Good luck, good trading, and hope to see you on the next update.